Freeport-McMoRan.com. Let's take a look at the concept of uniformity, and we're going to be using Facebook to study how uniform action in the RSI generally tends to indicate that there's a turnaround or a trap. For example, take a look at Facebook's action at the beginning of February. So we're talking about this reversal here. Strong move 1 week and followed by a strong move down the next week. So we're going to take a look at that. Obviously, we can see that this was a trap because the stock hasn't been back to those levels. And at the same time, same period, we can see here that Google has the same look and feel. Nice spike here 1 week and followed by a sharp reversal the next. So we can clearly see that on the weekly chart, this was a trap. Now, if we go to the daily, we can see evidence of uniform action. For example, take a look at Facebook. All this trap zone here came with uniform activity. That's uniform activity in the shape. If you cut this in half, you can see that they're equal sides of those two dome type situations. So that's obviously uniform activity. Again, coming back to the theory that uniform activity tends to give you reversal. Let's take a look at Google's daily chart, and you can see that this clearly was a trap, and it happened again with uniform activity. Looks like an inverted V-type formation. Now, let's take a look in detail why the stock could have stalled. We see that coming off the highs of late 2015, the stock in Facebook had drifted all the way to here, and so we know that that move began when the RSI broke down during this break of this trend line here on the daily. So that's the break for Facebook sometime here in late November off the highs there. So we draw a line from there, and we can see clearly that at the highs here we have uniform activity above the red line and back below it. As we always talk about, this is generally a type of reversal that you can act upon because uniform activity for some reason tends to give a trap, and here is a clear example. Take a look also at Google's chart here, and we can see that on the daily for GOOG here there was a break off the highs there. Draw a line from there, and you can see that we did see resistance here for the highs of December, and then the trap came with uniform activity rejection on the red line for those highs, and now we are coming back to test that. In fact, if you take a look at Facebook's chart also on the daily, we are coming back to test the same level that had given us uniform activity rejection. So draw a line from here somewhere around here. If the stock cannot move above the red line, if it can't move above the red line and rolls over, then we can see same as was resistance here, this could also easily become resistance. There is also one more interesting look at uniformity, and it comes from a diagonal line connecting the lows of the daily RSI here in August. If you draw a line here, you can see that there was a break coming into 2016 off the highs there, and there was a pullback here. If you extend the same line, so extend the same line, clearly you can see that this was uniform activity above the blue line and back below it, which meant that that uniform activity was a trap, and that is exactly what happened there. And right now we are coming back to test the same line right here. So if we see rejection on this line also, that might suggest that around here the stock might have to pull back. Keep in mind, we mentioned that there was resistance around this red line. So we got two lines that the stock is going to have to move above if it is to see higher prices. Otherwise, around here it could easily be rejection and resistance followed by a pullback. Take a look at Google's daily chart. Another look at this trap zone here. So this trap, we can draw our line. This line gives us the break coming off the highs here, and there was a pullback, and so we extend the same line and we can see uniform activity above the blue line and back below it for the highs there, and now we are coming back to back test that blue line. So if the market cannot move above that blue line, then we can assume that the next swing trade for the stock is down. Keep in mind that there was a line we drew previously, which is that line there. So around here, either we can break out and continue higher, or we might show resistance on those two lines, and eventually the next swing trade could potentially be to the downside. So here we were just taking a look at uniform action and how we can use it to gauge where markets are moving, and especially if we see uniform action on the RSI, it tends to give you some type of a reversal and tells you that it's a fake move. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. EACS.